you want to win in the tax game, I advise you to watch this full video. What I'm about to say in this video has definitely changed my life, and let's talk about that. This important information that I'm about to share with you has changed my life because it allowed for me to understand taxes more and also how to win in the tax game. It allowed for me to be able to maximize my tax deductions and even increase my previous tax refunds. And ever since I started my business, it's allowed for me to have the confidence to know that regardless of however my business goes, I'm able to understand the tax code so that I can use the tax code to my advantage. Now, whenever you do hear about taxes and the IRS and the Internal Revenue Code, I'm sure that automatically gives you some shivers. You might be shaking in your boots when it comes to talking about taxes. But this is the information that's going to help you be able to be confident when it comes up in conversation and when you have to go file your tax returns, because this is information that's going to help you to minimize your tax liability and increase your tax refund. So let's get straight into it. So what is this one thing that has allowed for me to transform my tax game forever? It is called Section 162A. Now, Section 162A is within the Internal Revenue Code, basically the tax law, and it is basically saying that any ordinary and necessary expenses for your business can be used as tax write-offs. Now, what is ordinary and necessary? Basically, what ordinary and necessary means, it's appropriate expenses that you take advantage of on your tax return. So appropriate, common, not out of the blue, things that other business owners who are within your niche and industry are utilizing and making as well. That is ordinary and necessary. So you want to make sure you are documenting those type of expenses, because that can essentially help you drive down your tax liability and increase your tax refunds. Let's go over some examples. Now, if you run a hairstyling business, having an office space or a suite or a designated place where you do hair, that is a tax write-off because that is ordinary and necessary to your business. Also, having a photography business, what do you need to take pictures and videos? The camera. So that's ordinary and necessary, and that expense can be used as a tax write-off on your taxes as well. And say, for example, you run a digital business, and that's perfectly fine. So when you have a digital business, for example, if you have a marketing agency and you do digital marketing, whatever type of costs that relate to the marketing services you provide should be able to be deducted on your tax return. Now, this is common knowledge. This isn't anything out of the blue or unordinary. This is something that you can look up on the irs.gov website or talk with an accountant or just do your own research. This isn't private information. This isn't something that I had to pay tens of thousands of dollars for to understand. Anybody can learn this, and if this is your first time hearing this, make sure to take some notes. And let's go over some more examples. Travel, that's a big one in itself. So say if there's a business conference happening somewhere where you have to take a flight to. So say it's somewhere across the country, and in this business conference, you'll be able to learn more about topics that are related to your industry, more about your niche, and networking opportunities to learn from your peers, learn from people who are in the same field as you, learn from mentors, and even be able to get new clients. That is an ordinary and necessary business expense because that's going to help grow your business. It's going to help you be educated on trends that are current in your industry. It's going to be able to help you network with people who are in your field, and that's going to help grow your business. So that would also be ordinary and necessary. Also, business meals. Okay, we all like to eat, so definitely pay attention to this one too, because it can be tricky. It's still being able to be deducted on your tax return, but there are some limitations. So a few years ago, you were able to deduct 100% of your business meals, but now it's only 50%. It's better than nothing, but it's not the full 100 that business owners back then were used to. So how a business meal would work is you want to make sure your business meal is at a restaurant with a business partner, a client, a prospect, employee, contractor, somebody related to your business, and make sure that the topic of discussion is business related material as well. And we'll talk more about this later on in this video, but you want to document that to a T, and there's many reasons why. But that's how you're able to deduct business meals. You just having a meal and talking about business can be ordinary and necessary to your business and be used to drive down your tax liability so you pay less in taxes. So I also want to bring up this point. Hearing this information is something that should be life-changing for you and your future business if you haven't started one yet. Why? Because we do hear about how the super ultra rich and wealthy people are the main ones who benefit from the tax code, but anybody can take advantage of this. You having a business, you now know how to make some of these expenses that you make every single day to help you drive down your tax liability and pay less in taxes. So this information alone is going to help you win in the tax game automatically. And I also want to point out the IRS is going to look out for mainly two people groups: investors and business owners. Why? Is because investors help stimulate the economy because they're investing their money back into the economy, and business owners create jobs. So with that, it's going to be able to look at it as like a partnership with the IRS. So if you're an investor or business owner, you basically can partner up with the IRS, so they're going to make sure that you're winning their game. You do have to play their game to be ahead, but it's still beneficial to you and your business. So if you're a business owner, make sure you're taking advantage of business expenses. Of course, make sure you're accounting for your business income, but also pay close attention to those business expenses, because that's a tax strategy in itself in maximizing your business expenses to drive down your tax liability. Before we get to the next topic, let's take a quick second break. Make sure to like, comment, and share this video. Okay, so when you like, comment, share, and subscribe, you're helping the algorithm produce more videos like this. Whether it's from me or other people who make content like this is definitely going to help grow your business and help you to win in the tax game. So take a quick 3-second break, like this video, and also subscribe to stay updated on more videos like this. Now, we talked about some quick examples on how you can deduct ordinary and necessary business expenses on your tax returns, but let's definitely talk about what you cannot deduct. Now, I feel like I shouldn't have to say this, but I'm going to say it because some people may not know, and that's okay. But you cannot deduct personal expenses on your tax return as business expenses, okay? So anything that's personal, anything that's not related to your business, that's going to be a personal expense, and that cannot be used to drive down your tax liability. An example of this would be commuting from your home to work. So you're still working a job, even if you do have a business. That commute from home to work, from work to home, is not tax deductible because the IRS is going to look at that as personal mileage. And that's okay, because you can take advantage of business mileage for all things that are related to your business. But those type of mileage for personal reasons, they can't be deducted. Also, I feel like I shouldn't have to say this, but some people may not know. Illegal activities, they cannot be used as tax write-offs because they're illegal. You know, you're dealing with the IRS here. You want to make sure everything is clean and as legal and ethical as possible to save your behind, okay? So make sure everything is legal and you're not reporting any illegal activities, because that's just not going to end well for you at all. Also, for capital expenses, you know, those are things that have to be capitalized, and for the most part, they should be depreciated over a certain amount of time, depending on what type of capital expense it is. But sometimes you may not be able to deduct those as business expenses because they're capital expenses. But this is where you tap in with an accountant for, you know, more information, so you know exactly how to take care of those capital expenses you made. But yeah, for the most part, personal expenses and illegal activities should not be used as business expenses when you are writing off those business expenses. And now that we talked about some business expense examples as well as some non-business expense examples, let's talk about how to safeguard. So whenever you are making business expenses, use a business card. That helps out a lot, but also what goes the extra mile and can definitely save you, you know, in the event of an audit, God forbid if that ever happens. But say if you're audited, you want to make sure you have receipts. You want to make sure you have proper documentation for all of those business expenses you made for your business. Now, this could be in the form of a physical receipt or electronic receipt. If you don't have a receipt, it's not the end of the world. The IRS can still use bank statements, credit card statements to validate business expenses, but it does help out a lot when you have proper documentation in the form of receipts or other copies that explain what the business expense was for and how much it was for as well. An example of this could be in the business meals. meals. So an example of how to make sure you have proper documentation for those business meals you're deducting would be you have the receipt, the business expense or the business meal from the restaurant, you have the business meal in, and you should definitely write on the front or back of it who the business meal was with and what the topic conversation was. So it could be with your business partner and you guys were talking about marketing strategy or talking about how to provide better services to your clients, anything related to your business that is, a business topic that you talked about over a business meal. So make sure that's written on your business meal expenses or receipts, and that does help in case you are audited so the IRS can know this is a legit expense, a legit business meal, and it's properly documented. Also, another tip is you don't necessarily have to store all physical receipts. Now, accounting software such as QuickBooks does help out when it comes to having physical receipts but uploading it to a digital file. That makes it a lot easier so you don't have to keep those shoe boxes of receipts, physical receipts. It could just be uploaded into your accounting software and even help out with your bookkeeping in that sense as well. So thinking smarter, not harder, that always helps out when it comes to documentation and accounting as a whole. One of the last tips I want to give are some common pitfalls. Now, for the people who this is new information to and you want to hit the ground running, definitely do that, but make sure it's all ethical and, truthful. So you don't want to overstate deductions. Yes, it may seem like, oh, well, this is how I can pay less in taxes, and it is, but you want to make sure it's done the right way. So don't overstate. Don't, say you made business expenses, but you really didn't. Like, the IRS is going to know. Some things may slip under their radar, but, you don't want that type of karma coming back on you because you did something unethical. So just make sure everything is truthful. Just make sure you have proper documentation and you are reporting all the business expenses you actually made. So don't overstate. Also, make sure that no personal expenses are being deducted. For sole proprietors, people who don't have LLCs or, separation of business and personal, this may be kind of tricky, but you want to make sure you try your best to separate business from personal so that nothing gets, commingled for that when you do file your tax return. So, just make sure everything is truthful and make sure business is separate from personal, and you should be good to go and deduct as many business expenses as you possibly can. Overall, Section 162A is definitely one of my favorite parts about the tax code. This should also provide some information and some more details on how you can win in a tax game. So if you have a business or if you're aspiring to have a digital startup, make sure you're keeping track of your business expenses, and that's a great tax strategy in its own, maximizing your business expenses so that you're driving down your tax liability and also using things that can help grow your business at the same time. So if you enjoyed this video, definitely make sure to leave a comment, ask any questions if you have some questions as well, or you can actually click the link in the description to schedule a free consultation with my accounting firm. My accounting firm, D. Howard & Associates, provides free consultations for anybody who has questions on taxes, business, and how to, run their accounting software or systems that are in place as well. So don't be shy, definitely schedule a free consultation and we'll answer all of your questions. You can also leave questions in the comment section and also like and subscribe. So subscribe so you can stay updated on more videos that help grow your business and help you win in the tax game. And I will see you guys in the next video.